Japan's Ministry of Finance warns of yen intervention, but not as we know it. I'm Jamie McGeever and this is today's Market Pulse. Well, dollar yen continues its rapid ascent, rising as high as 86.63 today, a level not seen since August 2010. But Japanese Finance Minister Taro Aso warns that Tokyo stands ready to intervene if speculative moves drive excessive yen gains or losses. Is that mere diplomacy, or is Japan actually ready to make the rare step of intervening in the FX market to buy yen and not sell? Well, the warning was enough at least to trigger some profit-taking, and for more on this and the latest Italian bond auction of the year, let's get out now to James Shug, Chief Economist at Westpac. James, Japan hasn't intervened buying yen since 1998. What would prompt them to do so again? Would it be a rapid move over, say, 100?
Rather than put a number on it like that, I think what I'd say is consider the circumstances at the moment. We've got a new administration. We've had a significant appreciation up until recently in the yen that's been problematic for that economy. I think the policymakers are taking the opportunity to remind markets that there is a new administration of sorts in place. There are a range of policy tools that are available to central bankers, including the Bank of Japan, although they've exhausted many of them. And I think it was more just a shot across the bows to suggest that we're new, we can fight against the markets. I don't know that they can fight successfully long-term against the markets, but nevertheless, I'd regard it as jawboning to try and take out some of the more risk-averse speculators that might have otherwise been prepared to push the yen around in either direction.
OK, well, Aso was talking about excessive moves. Here's one for you. In the fourth quarter, the yen has lost around 10% of its value against the dollar in just 3 months. That's on track for its third heaviest quarterly loss in 40 years. If that's not excessive, what is?
Well, it is excessive, and that's one of the joys of currency markets, in that you do get excessive moves from time to time. What central banks can do is step in and test the market to see how deep the transactions that are going through are, to see if there is not so much necessarily an excessive move, but a move that perhaps is unjustified because of some quirk in market conditions or what have you. But central banks, even the Bank of Japan, I don't think, SMB, possible exception, can prevent a currency like the yen from going where it goes. Safe haven flows, if they come back into the yen, they will be an overwhelming force. On the other hand, if the Japanese economy underperforms in an environment where we see a surprise uptick in global growth in 2013, 2014, then you could see substantial yen depreciation. Okay. Now, and I don't see that the Bank of Japan would be able to do much about that. OK, finally, Italy's bond auction today. Rome sold almost 6 billion euros of paper. The yield ticked up 2 or 3 basis points. What's your reaction? Well, we'd say it's a rather good result, really. I mean, there's been some negativity towards risk assets of late, yet the auction went off pretty well. In fact, the whole European sovereign debt crisis has kind of gone down a rabbit burrow for the time being, it would seem. The ECB's OMTs, not a euro has been spent yet. It seems to have done the job in terms of pulling yields down. Market seems to believe that can be sustained. We've got political uncertainty in Italy, but that doesn't seem to have perturbed the markets too much. So all up, I'd say that was a pretty good result for Italy.
OK, James, thanks very much, and Happy New Year when it comes.
Hey, same to you, mate.
Time for a stock check now. European shares in the red today, dragged down by financials. Banks down almost 1%, with Spain's Bankia leading the way with another whopping sell-off. Shares are down 25%, one day after Spain's rescue fund said the nationalised lender has a negative worth of over 4 billion euros. A bit of context, however. European financials are on track to close the year with a 22% gain. This would be the fourth best performance in over 20 years. Finally, on this day in 1967, the New York Stock Exchange finally admits its first woman member. After initially meeting with ridicule and hostility, Muriel Mickey Seibert took her place alongside the other 1,365 male members of the exchange. Now known as the first woman of finance, Mickey went on to found the brokerage that still bears her name. That's today's Market Pulse. Do check out our other programmes on demand, including where Standard Life Head of Investments Rod Paris thinks the returns will be in 2013. I'm Jamie McGeever. This is Reuters.